Good morning. Welcome to the first ICBC Global Investment Forum, I think not only in Berlin, but also in Germany. Alex, you invited me to this conference. We had some good discussions in advance. You asked me for some materials. I sent you the CV, some photos, and you continue to ask me more photos. So I was thinking, why do you ask me for these photos? But I was too shy to ask, so I made my own ideas. I think it was because I looked too much like a traditional banker. And therefore, I was thinking, what can I do against that? The only thing which came into my mind was I let my hair grow, which I did. And Alex, I hope you appreciate it. But I have to admit, this is only facade. Professionally, I was grown up in banks. I'm doing M&A business since almost 30 years. Started with Arthur Andersen in Cologne and Milan, then built up the M&A department at Nordby, one of the Landesbanks in Germany. Then I was heading the M&A department of the Z Bank, second largest German bank. Worked for a family office and opened up my own M&A boutique with partners a couple of years ago. And I think, Alex, it was exactly what you wanted. You wanted the view of an M&A guy on the cannabis industry in Germany. And we noticed one thing when we talked to investors regarding cannabis companies. They always smile at the beginning. I don't know why, but it's a very positive introduction to talks. And we don't see this smile when we talk about a machine component manufacturer. There are always some engineers who used to smile also when they see these machines, but usually they only smile when they see machines. And but apart from that, the cannabis industry makes people smile at the beginning, but at the end, it's still a business, and the economic rationale behind it is the same as we have it in other markets. So in my keynote, I would like to elaborate how an M&A guy sees the state of the cannabis industry in Germany. We will also have a close look on the funding landscape and the expectations of different investors. And I will also try to highlight some specialities and obstacles for the cannabis industry in Germany, always from the point of view of an M&A guy. What we're doing in M&A, most of the time we organize sales processes. Sales does not always mean that we sell the whole company, but we find new partners to enter the companies, partners who bring in growth capital experience on new market opportunities. We also find adequate target companies, adequate buyers. We organize the whole transaction process from the preparation of the information memorandum, the market approach, organization of the due diligence process, and the negotiations until signing of the sales and purchase agreement and finally closing. That's in a nutshell what we are doing. We do that in a cooperation. So we are focusing on Germany. If we need advice from other countries, we are bound to an international network, GCG, Geneva Capital Group. And most of our partner companies are like us, owner-driven and owner-managed M&A boutiques in most of the economic centers in the world, apart from Canada, I have to admit. And I suppose if we talk to our colleagues in the US or the States, they will have a completely different view on the cannabis market than we have it here in Germany. And I think for our Canadian and US colleagues, the cannabis market would be very similar to the aforementioned machine component producer. So it might be even more interesting for us to focus on the German market. There's, I think, much more fantasy. And last slide on what we are doing. Our corporation is active in 27 countries. 27 industry segments in 24 countries, and 30% of our transactions are cross-border. And when we are talking about the cannabis segment, we are talking about the medical segment, the wellness segment, the pharmaceutical, industrial hemp, adult use, and whatsoever, so different markets. And we might also look alongside the value chain, genetics, cultivation, processing, extraction, purification, formulation, manufacture, distribution, retail, brand, and so on. And what traditional investors do, they try to find a box which they already know, and to compare this box to the cannabis market. So when we start discussions with new investors, it is very important to find the right box. Are we talking about agriculture? Are we talking about healthcare? Or is it narcotics? And alongside with that, we also have different valuations wherever we tick the box. When we, from Germany or Europe, look into established markets, it's clear that we have to consider the US and Canada and think if this could be a blueprint for the German industry or the European cannabis market as well. And especially in Canada, with its relatively easy access to capital by public markets, CSE and TSX in Toronto, opened the door to retail investors and growth. But now we see, and we come to that a little bit later, that with these equity stories of the stock-quoted companies, we don't have only positive effects, but I think we can also learn something from the experiences the Canadian and US stock-quoted companies made during their expansion. And especially the conservative attitude of Germans towards stock markets might lead probably to other and different forms of financing in Germany. And I think I haven't been there at that time, but I think Europe must feel now a little bit like the US in 2013, when Colorado and Washington were the first to open were the first rec states. And the fundraising in the US was always driven by new opportunities, new states, and a continuous growth since many years. And Canadian and US investors have a close look on the developments and in Europe and in Germany and try to continue their growth stories also in Europe, if they are still in the position to do that. I mentioned before that we come to that later, because they have to underlie their equity story. And they want to replicate their success in Europe as well. I doubt if that would be possible, as they think, but I think that is what we can expect from the US and Canadian companies. In Europe, started 2001 to enter the medical cannabis market, and we only talk about medical cannabis here. The Netherlands paved the way for medical cannabis in 2003. Other countries followed with a very strong delay, but production capacities are expected to build up very significant in the years to come. 12 European countries legalized, out of 21, legalized medical cannabis in the last 5 years, so it's still a very recent development. And many countries enter the medical cannabis market via pilot projects, and plan to establish medical cannabis in their healthcare systems. To date, no European country has legalized cannabis for adult use purpose. Luxembourg, Switzerland are thinking about to fully legalize cannabis, and also Netherlands are rethinking the actual concept, but today we're still talking only about medical cannabis in Europe. In recent times, some of the European stock exchanges woke up, especially in the United Kingdom and in Copenhagen and Stockholm. In United Kingdom, end of 2020, we saw an allowance that both UK and overseas cannabis companies can be listed at the LSE, the London Stock Exchange, provided that the activities can either be licensed or would be legal in the UK, and that the proceeds of the Crime Act do not apply. The LSE had a number of oversubscribed IPOs, and therefore the UK until now is the most active cannabis country in Europe. A rough estimate would be that about 50% of the European funding volume comes from the States, comes from the United Kingdom, and the second largest country with approximately 10% of the funding volume is Germany. But Germany is by far, is what we can see here, by far the biggest medical market in Europe, with about 73% of the whole market volume. But if we compare the share or the market size, which is estimated to be about 300 million, I'm not talking about billion, 300 million in Europe right now, and compared to the size of about 25 billion, the market size of US and Canada, we see the big difference and where the markets stand. In 2017, a German pilot program for medical cannabis allowed the production of 2.6 tons for the selected companies. They are mentioned here: Aurora, Afria, and Demican. And these three German operators gained substantial interest, as many companies wanted to get a footprint into the German market. But I think now we made the experience that economic-wise, the terms of the deal were not that positive as they expected to be at the beginning. So Germany cannot meet the total demand of about 5.5 tons per annum, and imports the rest from usually Canada and Netherlands in the history, but nowadays also from Spain, Denmark, Portugal, and some other countries which cover the difference. When we look at the big 3 or 4 companies which are used to be said that they dominate the market, they all come from the States and North America. They did a lot of value chains enhancement in the past. Their acquisition strategy follows a horizontal integration alongside the value chain. We saw a lot of transactions in the past. We come to the German transaction in a while, and we will see that they are not that active anymore, at least in Germany. But we have a very notable transaction that in the States, that the Tilray acquired a significant stake in the multi-state operator Madman, with 26 dispensaries, and also a private equity company from Toronto entered in and put in another $100 million in proceeds to open new markets, and another 15 dispensaries are secured by this dry powder. So there's a movement between the States and Canada. And when we look at if there's anything we can learn from the development of these big cannabis companies, I always used to look at the figures. And when we look at the figures of, for example, Aurora and also Canopy Growth, the revenue, and I'm talking about 2020, the revenue of Aurora was roughly 300 million, and the net loss was 3.3 billion. And this is not an error. This is the balance sheet of Aurora of last year. So they made a lot of impairments. There was roughly 2.5 billion of negative impairments. And even if we take out the negative impairments of 2.5 million, there's still a significant net loss in comparison to the revenue made. And if we also look at Canopy Growth, which is similar, it's a revenue of roughly 400 million. They have impairments of about 600 million and a net loss of 1.3 billion. So if a traditional investor looks at these figures, he must say something went wrong in the history. They are not profitable on an operative basis. They made much too expensive acquisitions in the past. And I leave it to your judgment if the way Canadian and US cannabis company grew in the past, is that what we should adopt in Europe? When we look at the European landscape and when we remember the market size, then we can also think that the investor landscape is very different from the States. And the investor types which drive the development in Europe right now are almost, for about 80%, early stage investors. That means accelerators, incubators, high net worth individuals, which stand for about roughly 45% of the funding volume in Europe. And venture capital in its different stages stands for another roughly 40%. And only more or less 10% of the transaction of the funding volume came from, let's say, traditional investors, private equity, and family offices. And that gives, in my opinion, a clear difference between where the American, the US and American and the Canadian market and the European market stands. Nevertheless, talking about Germany, there are a lot of transactions which took place especially in this year. And we saw an increasing M&A activity, and we saw a bunch of very different transactions. The recent transaction from August this year is Australian health house bought Can Pharma, a privately held German medical cannabis sales and distribution company, which owns also a clinic, medical cannabis consultancy in Barcelona. And in Germany, Can Pharma imports and distributes third-party medical cannabis products and holds also a pharmaceutical manufacturing license. And now Health House could leverage the German contacts of Can Pharma. The second transaction, which took place in June this year, and from my opinion is the most interesting transaction, is Sanity Group, a startup from Berlin, founded in 2018, was able to close the biggest funding of roughly 36 million from new and existing investors. It was the second financing round, and investors from Europe, but also from the US. And I think, and I'm very curious if we can hear more about this, from my point of view, very exciting transaction in a while, from the founder, Finn Hensel. Canovum, also a German company founded in 2019, is the only stock-listed company, was stock-listed in May 2021. It's not stock-listed in Toronto, it's not the Nasdaq, it's not London, it's not Frankfurt, it's Düsseldorf. But it's the first listing we saw in Germany. And Canovum is also a fully licensed pharmaceutical wholesaler, an importer of medical cannabis products, also based in Berlin. And they also want to launch a proprietary medical brand. And the transactions continue with Demican, and also this different kind of transaction, also very interesting. Demican wants to cover the entire production chain for medical cannabis, from cultivation to further processing and storage to distribution to the pharmacies. The company, still very young, was founded in 2017, and in May 2019, Demican was awarded one of the 3 contracts by the Federal Institutes for Drugs and Medical Devices, BfArM in Germany, and is the only independent German company to cultivate and to distribute medical cannabis in Germany. Last but not least, we also saw a merger. Cannabis and PS Group joined their forces to form Semdor Pharma Group. PS Group, founded in '93, is a pharmaceutical manufacturer, re-importer, and logistics service provider for the narcotics industry. And Cannabis, prior to the merger, was an independent wholesaler and medical cannabis in Germany. And here we also saw a private equity company, Orkila Capital, who stepped into the merger with about 40 million of new capital. So this is the transaction landscape we saw this year. I also mentioned 2 tombstones more from recent years, from prior years, 2019, which I don't want to elaborate on that now. But that means we see much more M&A activities in the past in Germany. And what gives me even more confidence for the German cannabis market, these are the transactions, these are the companies who got funding in Germany, but there's a whole bunch of companies which is active in the German cannabis market. Some of them are also present in this conference. And therefore, for example, I'm very curious to hear the experience of Tim Feike, the CEO of Wico. He will talk to us later today. Very interesting company. When we're talking about early stage investors, and I mentioned this is more or less the investor type we're talking about in the German cannabis markets, early stage investors are strong believers. And traditional investors ask for evidence. I think that's the difference between these investor types. And usually evidence should be demonstrated in financial statements. Traditional investors love long established, strong growing markets and profitable and cash flow positive companies. So none of the Canadian stock listed companies would match the expectations of German traditional investors. But the Canadian companies and the market they are active in serve as a blueprint for the German cannabis market. They give clear evidence to the fact that the cannabis market is existing and is strong growing. The initial product, the cannabis flower, already exists and we don't have to invent it. And we do have the proof that it can be sold. Therefore, the proof of concept is already there, even in Germany. And this is the difference from a market in which the startup wants to sell a new and revolutionary machine which nobody knows already. The founder believes that his machine will be disruptive and he needs other believers, the VC investors, to give him money. Cannabis is an already existing product and is already sold internationally. And once national legislations change, the cannabis market, from our point of view, will develop very fast. And that's why we believe that the step from an early stage investor, which we saw before, to traditional investors will be a very short one and will be very fast. It is my assumption that traditional investors will look at opportunities which offer at least one profitable year. Most of the funds usually require at least 3 profitable years, but I think in this industry, for not all funds, but some funds might also accept 1 positive year, and companies should have a turnover of around 10 million or slightly below that. Then they will gain the attention of traditional investors. And we believe that this sales level should be achievable, especially for distribution and sales company, in a relatively short time frame. There's still a lot of money in the market and not enough attractive target companies to satisfy the appetite of the institutional investors. German traditional investors usually are interested in cannabis models, business models, once we talk to them, but there is still very little know-how and understanding of the market. And that's why I'm also very grateful for Alex's work here. We need more know-how and understanding of the cannabis market in Germany, especially the traditional investors. And this applies for different kind of investors. For almost every established market, we have investors who have a specialized sector expertise, or they have experience from recent or former participations. In the cannabis market, apart from general curiousness and a positive attitude, we still notice a lack of a solid gut feeling, which makes traditional investors jump into a participation. There are still ongoing discussions if we're talking about narcotics or an agricultural product. Some investors still have compliance problems. German banks are still very restrictive as far as real estate financing is concerned. Most of the cannabis production sites are built outside Germany, and German banks usually do not want to finance cross-border. Lots of them still have compliance problems and still exclude cannabis production sites. Real estate investors, or for real estate investors, cannabis farms are a niche market with high capital requirements for relatively small companies. And cannabis production sites are also seen as special purpose properties with an unclear second use. And third, most of the real estate investors are too small in order to have a positive impact of a cannabis production site on their risk position and the overall real estate portfolio. There are only 2 handful of potential investors in Germany right now. Political risk and dependency, mainly on political decision, is also something which traditional investors do not like. So these are some obstacles. I think we work today on the first one, the understanding and know-how of the German cannabis market. And I stick to my belief, which I mentioned before, the step from an early stage market to traditional investors in the cannabis industry will be a very fast one. I wish you all inspiring hours on the first ICBC Global Investment Forum, good discussions, exciting contacts, and a growth in networks and ideas. And thanks to Alex and his team that you had the courage to bring this format to Germany, also at that time. So thank you very much, and thank you very much for your attention.